So most of the traders are sold the false idea that the markets move or markets work on some magical trend line or some support or some resistance. But in reality, it doesn't work like that. Markets are always moved by macroeconomical data and economical indicators. And if you have any doubt about it, I traded FOMC live here. This was the candle where the Fed's interest rate came in to be were increased by 0.25 bps right here, and markets moved up. And as anticipated, because the 25 bps increase in the interest rates was already priced in, and that is the reason that the markets moved up. And as the markets started to go up, this was the original consolidation right here, and there was a point right here. And remember, below every low and above every high there is liquidity. So there was a high liquidity below this point, so we only want to use technical analysis for our entries, but in reality it doesn't even work like that. Like if I could have even bought somewhere around here, right? But things don't work like that. We also have to be disciplined when we are trading, so you always should find a strategy which suits your personality. So the markets moved up. Fundamentally, we had some strong data supporting us that the markets, the gold especially, is going to be bullish, right? So as the white line that you see right here is the liquidity point. As soon as price retraced, went below the liquidity point, and as soon as it started to reject, I entered buys. The stop was around 20 pips. Most of the time my stops are around like 20 to 30 pips. Stops were 20 pips. TP was up here, made a quick 1 to 6% on this trade, and even though it went up, it still went up. There was also the Paul speech after the news right here, the economical data. So it was pretty easy trade, right? So you don't need to take like 10-20 trades each day, you know. All you have to do is to understand macroeconomics and then just trade on the news days. Most of the time what you will hear from these gurus is that you should avoid trading on the news days, or you should avoid trading the news, but in reality that is where the real money is made. And all they talk about, you know, the origin of the move, etc, etc, you know, like the order block, you have some imbalance, FVG. I also use more ICT concepts. I also use some support and resistance concepts as well, right? But you have to understand that the move actually comes from macroeconomical data, and if you can have a deep understanding of how macroeconomics works, or how the markets work, or how the financial system works, you can be really profitable. The first thing that's going to solve for you is that you will not be confused with the direction of the price. You will not be looking for where the price is gonna go, right? You will always know, you will always anticipate where the market is gonna go. So if you can get all of that knowledge, it's gonna be really easy for you. And if you're a trader and you have some good entry and exit points, but you struggle with direction, right? But you're still, you know, like at the break even, or you know, somewhat profitable, like 1 to 3% every month, you can still, if you can add this economical data, this economical knowledge into your strategy, I guarantee you will be hell of a trader. This is something that they hold back. I don't know the reason behind this, but I believe that if you are a trader and you want to trade, the first thing that you should learn is macroeconomics, and how, you know, a country is run, what are interest rates, what is inflation, what is PPI, you know, all of these terms you should learn, and then you should dive deep into the treasury yields, you know, like all of those stuff, right? But when you know the fundamentals, trading becomes really easy, and then you don't have to struggle with the direction, and then you don't even have to struggle with where you want to enter, because if you have an entry and exit point, if you know your strategy, then most of your 90% of the time you will be hella confident in your trade and the trades that you will take. So if you want to learn more about the macroeconomics, and how you can intertwine a strategy with the macroeconomics, you should definitely, I will leave my Telegram down here. You can message me and then I will add you into my private group where we trade live each day and we take trades, and we don't trade like, if there are 20 business days in a month, we don't take like 50 trades. We only take like 6, 7 to 8 trades, and we make 20 to 25%, 15%, 10% each month, and then we just call it a day. So I hope I was able to provide some value, and I was able to provide what you're missing in your strategy. If you like the video, please